Watch this video and you'll never find yourself again trading low probability conditions. So first of all, what are low probability conditions? Are conditions where the probability of a trade decreases a lot, okay? So if your average win rate is like 60%, you'll see that if you only trade low probability conditions, you are going to have a win rate of maybe 40-30%. So if we have in mind that trading low probability conditions means losing more, what you want to do is that you want to skip those days and wait for the high probability ones, because often when you are starting or you are in the break-even phase, what you'll find is that you are winning, but you are losing those wins during low probability days. So you end up losing a bit of money, being break-even. You could be profitable, but you aren't, and this is the reason. So first of all, we don't want to trade when we just had a great expansion or 3-4 days of bullish momentum or bearish momentum. So here we have two examples, okay? First of all, around here we can see that these last bullish daily candles haven't probably left any good opportunities. This is just consolidation and slow grind up. Also around here we had 1, 2, 3, 4, 5 bearish candles, and also we took a draw of liquidity. So what happens here? Just consolidation. Also around here we can see that we had a huge expansion. What happened the next day? More consolidation, okay? Also, it's important to keep in mind that correlated assets must be correlated if we are in a high probability environment. So euro should be going up if pound is going up. Obviously, they are not the same asset, so one could be a bit weaker or stronger than the other one, but they should be moving similar. So also they are inverse correlated with DXY, and if DXY is going down, we don't want to see euro going down too. So if we can see this daily candle, we can see that euro closed a bullish daily candle and pound closed a bearish one. This is a day we want to skip, and if we take a look, it was a seek and destroy profile. This is not a day that will change our trading career, and we can lose a lot of money trading this day. So yeah, keep this in mind. Okay, so next condition will be sweeping an important draw of liquidity. We can see that we just swept this low, and what happens now is just poor consolidation, as we already saw a big expansion here. So price is not expanding forever. It expands, consolidates, manipulates, and expands again. It is also important to note that this would happen in any time frame. If you want to trade London but Asia expanded and also took that draw of liquidity, London isn't going to give a clean move most of the times. So also you have to take it in mind. This example is also good to know what to do when we have a range. We sweep the lows, we sweep the highs, and dump back into the range. We can see that after this happened, we had a consolidation for 6 days. So if you are trading London and it sweeps, let's say, the Asia low, then it goes to the Asia high, but then it drops back into the range, you have to be more careful because it is probably just a range and we are not going to see any displacement from here for a while. And to sum up this video, I want to teach you all that if we want to see a strong momentum, we expect lower fair value gaps to be left as a breakaway gap. That means that those fair value gaps don't get filled. So as we can see, price makes a sweep inside the first fair value gap and then it just sends higher, leaving the first fair value gap not filled. So this is all, and hope you'll learn something from this video, and see ya.